Welcome to the new age. This is the 2.5 Investors Podcast. How y'all feeling today?
Feeling good.
I'm just here so I don't get fined.
Good. Don't get fined. This is Datwan. This is LJ. This is Antwain. Let's get straight into it. AMC.
Woo.
That's the topic for today. AMC. That's
Big
our
topic.
favorite topic, to be honest with you.
We like to talk about that.
AMC is over $37. It's up $3 right now as we're recording this. What's your thoughts as a new / amateur / inexperienced investor on the AMC frenzy?
I'm mad I ain't jumping in it before. I think I'm a little too late now. But AMC looking good, man. I wish I would have jumped in when it was down a little bit. You feel what I'm saying? So that's what I gotta say about it.
And as far as the experienced investor on this side of the table, what's your take on AMC?
I'm just I'm patient with it. You know, it's AMC done had its run up, its pull back, its run up, its pull back. You know, it appears to be on another run up. So that's been pretty much the story over the last 8 months.
Right.
You know, I do think that it's a great opportunity, you know, for investors to make a lot of money on. I made, you know, quite a bit of money on it myself. I'm still currently in it. But right now, or over the last few weeks, it seemed like it's been cooled off. Mm-hmm. So hopefully the momentum that's trending upwards today will continue.
Right.
I wanted to say something. Something it stuck out. You said patience.
Mm-hmm.
That's what you got to be when when you're investing into these type of stocks. As far as like AMC, and is it taken away from the impatience and giving it to the patience?
That's Warren Buffett's favorite saying. He said that's his outlook on the stock market is the transfer of wealth from the hands of the patient, from the hands of the impatient to the hands of the patient. So Warren Buffett is almost stood the test of time as far as winning in the stock market. So I don't know no better other advice to follow.
Right.
Yeah.
So again, as we talk about AMC, you said we're currently in a pullback, right?
No, I said we're currently trending upwards.
Okay.
It's a pullback from the all-time high of $70+ dollars.
So the next roundup, where do you see it going?
I think we have another run-up, topping $40, topping $45, and then we probably get some type of pullback for another trajectory
Gotcha.
upwards.
So go ahead.
Oh, I was gonna say no.
Oh, it looked like you got something to say.
No,
It looked
listen.
like you got something to say.
Average Joe got some thoughts. Come on, Average Joe.
So, nigga he over there coaching niggas.
He look like he work at the airport. He was like,
All right, so
AMC, let's go.
Let's try to break down what AMC really is and what actually is happening for a new young investor. So when we talk about AMC, do you understand why it has such a
Dramatic impact on the media / the stock market / investors?
Right.
No, I don't. I really don't, because nobody's going to the movies, in my knowledge.
And that's a fair
To the
point.
movie theaters. Let me get that.
No, that's a fair point.
Yeah.
So basically AMC now is called Ape Nation. But is at first was the Reddit crowd or the retail crowd.
When did this start? You're going over the history, it sound like?
I'm somewhat.
Okay.
I'm not going all
Then
the
you're going
way.
to give us the skinny.
Right.
Okay.
So basically it started when the Ape Nation retail, average retail investors noticed hedge funds was over leveraging themselves, shorting stocks. We talked about that on the live stream earlier. Shorting stocks. So AMC was one of the heavily shorted stocks back in January, and still is to this day. But back in January, so the ape nation realized that to fight their over leveraged positions in AMC, we went super bullish and dived in and poured in money and bought in shares to AMC to force the shorts / hedge funds / hedgies to cover and basically have a huge spike in the stock price.
Okay.
Yeah.
So what's shorting the stock?
So
Great question, by the way, Average Joe.
So shorting the stock is basically when you're betting against the stock. You're opening a position to bet against a stock. What then happens is it's pretty much, I don't want to say a loan, but it's pretty much you're taking a position against the stock. Which what happens is when you take a position against the stock, though, you eventually have to cover back, and the more it goes up, you lose money. The more it goes down, you make money.
And that's in the short position.
That's in the short position.
Yeah, if the stock trends downward, the investor that's shorting the stock makes money. But if it's increasing in share price, the investor that's shorting the stock, same investor, will losing money.
That sounds like a game of blackjack. You gotta beat the dealer. A little bit. You gotta beat the dealer.
Not quite. No. But so what happens is if you short AMC, right?
Okay, I'm shorting them. Okay.
Yeah, and I'm I bought shares, regular shares.
And I'm the exchange. I'm the market maker.
Okay. So
why not?
Yeah, he wanted to.
So why not?
I'm just here so I don't get fined.
So when you shorted AMC, the moment the share price goes down, you start to make money.
Ooh. Okay.
The moment the share price goes up, I start to make money.
So that's
crazy. I never heard of that.
But as I'm making money, you still have to cover the shares that you're shorting.
Because you borrowed them shares from me.
Right.
Oh.
So you never really bought the shares.
You just borrowed them on a bet that it will go down.
Right.
That the share price will go down.
So eventually you have to cover the shares. You have to buy back the shares that you borrowed.
Okay. And when you buy them back, you got to buy them back at whatever price it's grown to. So you may have purchased it at $12. This would happen, early, literally, or you may have purchased it at $5. Let's just say 12 for the sake of argument. You purchased it at 12, betting that it will go down, right? So, if, it go down under 12, you begin to make money. As it's rising above 12, you're losing money. So AMC went all the way to $70+ from that $12 mark. In earlier part of the year. It actually rose to its heights in June, early June, right? So even though you purchased it, purchased each share at $12 with the bet that it would decrease or go down, it took a different course and went up. So at $70, if he decided to sell, you would have had to buy that share, the shares back that you borrowed at $70 versus the original 12 that you made it at.
That's not good for the average Joe.
It's not good for the shorts.
And the average Joe can be a short.
Yeah, it's not. That's what I'm saying.
But that's like basically not trusting what you putting your money in. No, yeah, because you like I'm betting that this is going down.
It's not that you're not trusting where you putting your money in.
Yeah, because
it's you making a bet. It's you making an investment that you believe this stock will go down.
Right. You just.
So let's go based off of what you said earlier. Like nobody's going to the movies, quote unquote. That's what you said.
So
That's
fundamentally,
Okay.
So if you know that,
Mhm.
you could be like, well, I'm gonna take a short position against
Okay.
AMC.
Okay.
You get what I'm saying?
Yeah.
So you may have been right about that.
Mhm.
With let's say a shareholder like me,
Yeah.
saw the potential in people returning back to the theaters.
Mhm.
You get what I'm saying? So I bet with the stock. I bought shares of the stock.
Okay.
So
not only that, you saw how he over leveraged his position,
right,
and you
Right.
knew he would eventually have to
Good
buy it back.
right,
So you didn't even the average retail investor didn't just rally around and bet only because we knew that the pandemic would eventually die out and people would go back to the theaters. We saw that you was over leveraged in your position,
Mhm.
and trying to short this or bankrupt the company or whatever, so have you. So what the apes did, like Datwan explained earlier, we've rallied around that and we bet against you crashing.
Oh, okay.
Similar to what happened in 2008, like we
Right.
spoke of earlier.
So talking about the short squeeze, because that's what it is.
Right,
a short squeeze.
right.
Short squeeze. Okay.
So when you have all these shares
Mhm.
to be rebought since they borrowed them, right?
Mhm.
And you have all these shares to be rebought. What happens when it's a lot of buying pressure against a stock? What does the stock do
Go down.
if it's buying pressure?
Oh, if it's buying pressure.
Yeah.
Okay, what you mean by buying pressure?
Meaning that buying, meaning purchasing and betting that it will
It's
go
gonna
up.
Okay.
Yeah, it's
Right.
a lot of buying pressure.
Right.
Think of selling as shorting
Okay.
and buying as betting that it will go up.
Okay. So say it again.
What is
Let's go. Let's see what it is.
so what happens when a lot of buying pressure happens
To a stock.
to a stock?
Okay,
What
it
happens
goes
to
up.
the share price?
The share price goes up.
The share
Correct.
price goes up.
Okay.
So if I'm a short, right,
You're short.
and I have my buddies right here that's shorting AMC,
Mm-hmm.
Right
and
along
we
with you.
all have to buy back the stock because we're all losing money.
Mm-hmm.
We're all losing money. We're all over leveraged. That then becomes a gigantic squeeze. It becomes a gigantic effect on the share price because it's a ton of buying pressure.
Okay.
So that's what happens when a lot of these hedge funds or whoever the shorts are over leverage themselves, and then that's when we get short squeezes.
Okay.
So do you understand what a short squeeze is?
Yeah.
What is it?
A bunch of people that's buying into hold on, come on, them stock words
Alright.
is crazy.
All right, so basically,
Stock wars.
Stock wars.
and that's really what it is, to
Right.
be honest with you. But
To make it simple.
again, if we all took, me and my buddies all took a short a short position,
Short position.
and we all losing money, so we didn't have to cover those positions, meaning buy back. That leads to a whole bunch of buying pressure on the stock price, which then causes a short squeeze.
And the squeeze is
Too many
Just think-
people on what?
Go ahead.
Too many people on one feeling. Y'all got a fill in the blank.
I'm trying to figure out where you're going at with it.
so in other
short
words,
squeeze for us, like, all right, the short squeeze, you saying it's a bunch of people investing in the one thing.
right. So you have the line is drawn in the sand here.
Okay.
Hedges versus the apes.
Mm-hmm.
Right? His buddies betting against the stock that it will go down. Me and all of my comrades, apes, Ape Nation, are betting that it's going to go up. So Datwan's question is, what happens when you have so much pressure, because we outnumber them?
Okay.
So it's a lot more buying pressure betting that the stock will go up. He said, what happens when you have all of that buying pressure against the stock?
Ain't they going to have to owe? Because they lost money?
They will have to owe.
But the price increased. That's what happens.
So once they owe, it's time. Eventually, they have to pay that debt.
Pay the debt back that they lost for the apes
for borrowing,
going up, or from borrowing, from going up, right?
You coming close, average Joe. You getting it? You getting it?
So pretty much that's what a short squeeze is, and that's what has happened with AIM. That's why GME went from $20-$40 all the way to $500.
You've seen this a couple of times in history, really more than a couple, but I just care to bring up a couple. One would be 2008 with the housing market.
Okay.
Right? It was a short squeeze during that time, same scenario, but it was hedges against, it was institutions versus institutions betting, right? The tug of war was there. And then another time that you've seen it, and the market collapsed, eventually because of that squeeze, right? Okay. In that instance, the shorts made a ton of money.
You talking about from
in 2008?
Okay.
Because Michael Burnham bet against the housing market, right? A bubble is formed, and eventually you can only put so much air in a balloon, right?
Okay, right.
So the bubble burst, and the shorts won. But in that instance, it was institutional investors versus institutional investors, people with large amounts of money. Another time would have been Volkswagen, right? And Volkswagen, again, it was institution versus institution. This is the only time in the history where it's been retail investors versus the hedge funds.
Right.
So that's what another thing that makes this battle, this tug of war on the stock market so interesting.
Right.
So would you call like the short squeeze like bandwagons? Like they just hopping on because it's I'm gonna go over here because it looked like this is where everybody else is doing.
I'm gonna tell you.
I think a better word that we use in the stock is in the stock market is FOMO.
FOMO. I've seen that a couple times.
Explain what that is.
Fear of missing out.
Right.
That's a good one.
So if I'm in fear that I could lose out on a big swing trade or a big investment play where I can 10x my money without doing my due diligence in this stock or what's actually going on, I may just throw money at it to see what I can get out of it. Okay. And that's what we call FOMO. So and that's what we see a lot of the half investors like yourself.
The average Joe.
I don't like to call you average Joe, but a new investor.
That's what he identifies himself as.
a new investor, they won't do as much due diligence, but have a semi understanding of what's going on without having a full understanding of what's going on, and just throw money into it, hoping they see a good outcome from it. At the end of the day, without totally, fully having the due diligence, the research, and the data to back up what they're actually investing in. So that's what we call fear of missing out.
Yeah, and I'm going to say it to you in another way. I think whenever people look at plays like this, or plays in general, I wouldn't say that it's bandwagon. I think they see it as opportunity.
Okay.
At the end of the day, that's what people apply their money to because they think it's an opportunity, whether an opportunity to win like Michael Burry did as a short when the market crashed, or an opportunity to win like the apes are winning now currently on AME stock, betting that it would go up.
And at the end of the day, it's a lot of money that can be made with fear in the market. Whether it's, you know, the hedgies, the apes, you know, average retail traders, institutional investors, whoever it is, it's a lot of money that can be made due to FOMO. So when I made a lot of money off a similar stock that had a lot of rumors, a lot of people didn't want to miss out on it, called CCIV, right? I got in at under $20. A lot of people got in after $20, let's just say.
Okay.
So you can make a lot of money investing in other people's FOMO.
Okay.
And other people's fear of missing out.
Yeah. Okay.
A lot of time. Oh no, go ahead. Ask your question.
That's like a perfect example, because that's how it was when correct me if I'm saying it right. Dogecoin.
Yeah.
Where everybody, you got the Meat Mill, all the celebrities talking about it, and everybody just was like, Dogecoin.
Right.
Let me just hop in here.
Exactly.
Like, okay.
Exactly.
So they was the FOMO.
Right. Exactly. FOMO. You gonna use that word a lot now.
Oh,
YOLO.
my guy.
and I'm glad you say YOLO too, because some people have a good understanding, and it's just like, I have nothing to lose. So I'll throw in $100 and I can make $1,000 investing into AMC, Doge, or whatever, just because I had nothing to lose. It's called a YOLO play.
Okay.
And you know, I don't judge anybody for the different type of investments they make, whether if it's with due diligence or without due diligence. At the end of the day, as an investor, you are risking your own money.
Yeah, you taking the risk. That's right.
You risking your own money, so you can do whatever you want with your own money. At the end of the day.
So you got some more? Any questions in regards to AMC outside of just general thoughts or questions?
Okay, I got a question for the AMC people. You know, it's getting a little tight right now. We'll be in the end of August, going into September and stuff like that. If the market crash, is AMC still going to be the future, or is just going to the whittle? That's a big word.
It's hard to really answer that. You can look at it. You can look at two sides. You can look at two sides of it, right? So some people think when the market crashes, that's when AMC will rise even more, because you have the shorts,
which is the big institutional investors,
right? They'll have to cover. And think about this: if I'm a short and I'm losing money on my main stocks, my main investments, because due to a market crash, and I'm already lost so much money with AMC, eventually I have to pay my debts.
You gotta pay.
Eventually I have to cover. So eventually it's kind of like, well, I'm losing money here. It's time for me to just give up or get out. And pay my debts, right? Or go on the verge of bankruptcy. You know, and just completely losing all my money. Because at the end of the day, we talking about real money at stake. So that's one way to look at it. Another way to look at it is fear in the marketplace. So if one ape feels though the market getting scary, it's time for me to sell. That, you know, that's one ape. Now imagine if 10 apes do it. Now imagine if 100 apes do it. Now imagine if 1,000 apes do it. Imagine if 100,000 apes do it. It could be a trickle effect. So that could, if all the apes start selling out of AMC, and even it's still big institutions in AMC as well, if they all start selling out of AMC due to a market crash, due to fear, then you could see a big impact on the stock, and then it drastically go down.
Okay, for an extra person like myself, you know, can I do both?
What do you mean by doing both?
Can I do shorts and
That's like
can I do, if I'm losing, can I? And you get what I'm saying? Like I'm not losing anyway.
So
it's like a seesaw.
Right. So let me ask you this: the seesaw. How could you be on both sides of the seesaw at one time?
You got me with that.
Exactly. Welcome to the new age. If you like this podcast, like, comment, subscribe. This is 2.5 Investors. We'll be back Friday. Let's get it.